Hey folks, welcome to Pro Trader Strategies. My name is Eric Wilkinson and this is Spotting the Trade. Yes, I am scheduled to go on in about an hour, but I did find a trade to look at, so I came on a little bit early. So make sure you folks, if you want to participate in these videos, are hitting that subscribe button and making sure that you're hitting on that little bell right next to it. That gives you a notification when I happen to come in unannounced like this right now. And smash that like button. It helps us out. It's like feeding a bot that runs out there and finds a person like you to share this video with. So please take a moment to hit that like button for me. And throughout this video, comment over there in this comment section. I will circle back around for you folks to make sure everybody's clear concept. So even if I'm not live, I will be checking in on you with those comments. All right. So without further ado, let's get on with the economic data across the pond. We don't usually talk about China. I'm not going to go into the details as to why I don't necessarily always talk about China, but one of the things that we are going to keep an eye on there going forward is their data points, because we're kind of worried about the fluctuation in the economy, whether we're going to be picking up steam or pulling back. So we're going to take a look at China, especially for some of these manufacturing numbers. Normally, we see them elevate those manufacturing numbers, but recently we've been seeing those a little bit more tepid. Now, when we see those a little bit more tepid, that really sends an alarm off in my head, because usually they pad their numbers towards the strength in the economy, and we're not necessarily seeing that. So let's talk about that real quick. GDP expected to be 5%, coming in 4.9%. That's probably going to be one of those headline numbers everybody's talking about. To be honest, that one's not the one that's really getting my alarm signal going off. It is industrial production, folks, coming in at 7.3%, expected to be 7.9. So usually we're not seeing those numbers come off if they're pretty close. They'll pad those a little bit again. And then, I'm sorry, that industrial production was 3.1, expected to be 3.9. That was a fixed asset investment, which was much lower in China as well. And that has to do with the government purchasing. So that's slowing down a little bit. All of those kind of culminating into hey, we need to keep an eye on this. Retail sales, though, was the shining number there coming out of China, and that came in at 4.4%, expected to be 3.5%. So a bit of a disconnect right now on this headline numbers out of China. We've got some industrial production numbers. They're pulling back a little bit while we're seeing the retail sales ramp up. If we're seeing retail sales really ramp up, I would have expected to see some of that industrial production ramping up, especially heading into a holiday season here. So a bit of a disconnect on this data point there. So enough about that. Here in the United States, we got our own industrial production month over month. That number came in at negative 1.3, folks. Expected to be a positive 0.3. So a huge miss on that frontline number. Capacity utilization coming in a little bit softer as well at 75.2. Now we got our one number that actually is making this look really good, and we got the NAHB. What is that? That's the National Association of Home Builders Index, coming in higher than expected at 80. We've been seeing that number kind of come off from those 80 numbers. It was expected to be a 75, which would have been a continued down in this number. This is a number, anything above 50 is expansion, kind of like our PMI numbers and things. So 80 is really elevated. There is some real positive news coming out of the National Association of Home Builders Index. Obviously, somebody else cares about the National Association of Home Builders Index. Anyway, they were signaling that higher prices was a constraint to that sector. We've seen those numbers come off a little bit. We've seen lumber come off, copper a little bit, and we're seeing shipping prices come way off out of China. So those are all good headwinds that are good to see are alleviating, albeit slightly there. So economic data across the board leads me to believe risk still to the downside across the board here in the equities. So we can pull up the chart here. And we can see crude oil was making that move up into the 80s. I was expecting us to fade this. A lot of folks coming out and saying $100 a barrel is imminent. We're right there at 83 today, making that new 52-week high here. I do believe that we are going to see some weakness here and at least break back down into the 70s, folks. If industrial production numbers are starting to wane a little bit, that is going to be a huge demand driver of crude. If it's coming off, that means that demand is going to be waning as well for the distillates, right? When we take crude oil and break it down, you and I get some gasoline out of it. There's going to be airplane fuel coming out of it, and there's going to be the distillates that they make plastics with, like PVC and things of that nature. So I think that we're going to see a little bit of weakness here in crude oil. 80s just is a little bit frothy here for the markets as far as I'm concerned for the type of economy we're having right now. It's just a little bit of shaky ground in order to really drive this to 100. I don't think that's really anytime in the near future, like let's say 2021 at least. Maybe next summer. We'll have to see if the economy really starts picking up some momentum here. Now, bonds, we've seen some weakness here as the equities are making those moves to the upside. There's some folks that are trying to jump on board with this move to the upside, but I think it's going to be one of those things where it is a fade, this type of move here in the equities, because the economic data really isn't supporting it right now. Gold futures is a little bit weak as of, again, flight to safety. Friday, it seemed like everybody and their brother was jumping on board with trying to buy equities, and they were selling these other assets like the bonds and gold futures. Well, folks, I think that was a bump that we are not really going to want to jump on board with on these equities. I think there needs to be a little bit more time. There are some equities that I think there's a bullish market in that we'll talk about here in a moment. But for the broader equity markets, I would be a little bit worried about this upside. Something to note here in the NASDAQ, we came up and bumped up against the 50-day simple moving average. We've never really made it back down to this trend channel, which is something that we've talked about time and time again. This lines up from, I think it's the 2017 trend area. So a revisit of that would be very healthy. Here in the Dow Jones Industrial Average, Thursday, we got above this 50-day simple moving average, continued that momentum on Friday, and then today seeing a little bit of weakness. Like I said, these economic data points coming out of China and here in the United States would lead me to believe that I wouldn't be coming in buying with both hands. Seeing some weakening charts here in the equities. Again, a setup like this in the E-mini S&Ps would look very toppy. We haven't quite gotten above that previous high there that's lining up with, let's call it 4470. Settlement above that would kind of create a newer high, right? Right now, what we're seeing is lower lows, lower highs, and that is indicative of a bearish trend. Now, a break above that would start making us look like, okay, we're going to start trading sideways here in the equities and not really have any type of correction. Breaking this down on the daily chart, you can see overnight inventory, no real discernible direction. Nobody really wanted to make a move, especially with those economic data points coming out of China. That had to leave those people believing that we were going to see some weakness coming into today. No real follow through with some good economic data here in the United States. So again, levers and pulleys. I think the technical analysis leads me to believe that the risk is to the downside. Now we're looking at the economic data, and that's not looking so great right now in order to really get me to want to buy with both hands. There are some markets out there that I do want to take advantage of, and one of those is in Kroger. We heard that Albertsons came out with their earnings. ACI. Now, I don't really trade Albertsons. Why? I do think that they're a great company. As a matter of fact, at one point in time, Kroger was a part of that whole Albertsons company. Now, I think that they are very similar in nature. This company, Albertsons, came out. They're more on the West Coast for the most part. They came out with much better than expected earnings. I think they were expecting in the 45. It came in at 64. Well, that gave them a boost to the upside. No volatility really coming out. Yeah, it might be an opportunity to trade some options in there. Well, they don't really have a lot of options going on in there. The markets are pretty wide, so I'd like to stay away from those. But in that, we've got Kroger coming up. I was looking at doing something like a call diagonal where I sell the front month to finance some of that back month. Just not a whole lot of premium in these markets to do like that synthetic long with a poor man's covered call, something along those lines that I talked about in our webinars. Synthetic longs, a lot of those for a bullish move would work out. With that said, it's a $40 stock, and I looked at buying a longer duration call option and financing it with selling a call. Wasn't working out with my risk reward that I talk about in the webinars. So if you guys want to check out those webinars, make sure you're flipping around on YouTube and find us at Pro Trader Strategies. Hit the subscribe button, because every Thursday I come on and do a webinar where I really drill down on one of these option components: when, where, and why. Setting up for an earnings trade, a call diagonal is a great one for a bullish strategy. So I did look at that, just not a whole lot of premium in there on that call that I'd be selling. That defines the risk, lowers my overall cost basis and break even. So there's a lot of good benefits to having that call spread or call diagonal, poor man's covered call. All of those things would have worked out with this one, but I wanted to take a little bit more risk for that reward. I think that we'll see some follow through here on Kroger, especially on that earnings that we've seen them do better and better going forward. Having said that, so simple enough, just went out and threw it in my IRA and in my trading account, both for this Kroger going into the January, folks, because I'm trying to limit some of that theta decay. Get out there outside of 70 days to expiration, just like I talk about in these webinars, looking for this volatility to really start expanding, especially when we're looking at going into this earnings. I would expect to see this volatility expand. So I'm in the January, so that means I'm looking at about 95 days to expiration. These Ds are where the earnings are in, but my strategy or my options should actually benefit from any volatility expansion, because like I talk about in these webinars, volatility affects the further durations options. So having said that, I went into the January and bought the 40 calls in there for $1. Actually, $1.46 is I think what I paid for those. Yeah, $1.46. I started out at $1.32 and chased that as this market was moving higher on the Albertsons earnings as well. So they're getting a little bit of follow through there. Hopefully we'll break out of this point of control area and at least test the value area high by that earnings. Okay, I'm not going to probably ride this through that earnings unless it's looking as a full loser at that point. But for the most part, we'll try to cover this before that earnings and get that volatility expansion and hopefully my directional move. All right, so that's about it for today. Make sure you guys are subscribing and hitting the notifications, because more and more I'm going to, now that we're kind of on the same page here, folks, that you folks, a lot of you are taking advantage of hitting that bell. I see you guys popping on when you get that notification. So more and more it's going to be when I'm finding those trades. If I hear my bell come off, I'm going in there and setting up for this video. So hopefully you guys are all subscribing. If you had anything to take away from this, please hit that like button so you can share this content with somebody else. And finally, comment over there in the section. I will make sure that I'm coming back around, make sure everybody's clear of concept. All right, folks, that's all I got for you. Other than if you can't take that, take it easy. Bye for now.